What an awesome week it was in regards with trading, as most of our zones, Forex, indices, commodities, has reacted nicely from the area of value that has been mentioned in the report, mentioned in my YouTube videos. Some entries we took, how nicely they goes in our favor. So if you're someone who want to skip this part of the video, as it's going to be really beneficial for you if you want to listen it, but if you're someone who don't want to listen this part, you can skip it straight to the timestamp you will see in couple of seconds. But if you want to listen it, I promise you, you're going to learn tons of knowledge, and it will really help you to understand trading in more depth, and it can help you to take efficient trading decision. I'm also going to teach you how the patience paid off if you just follow your rule, and how your trading is going to go up to the next level if you follow some very simple rules. Not a rocket science, very simple rules which you follow and you can able to make money in the financial market. And I don't only say that you can make money, I show you every week how we follow the rules, how we take our entries. If you have losses, I also show you the losses as well. But as you can see the track record, most of the time we come out profitable. And the example was the last year trade results. If you want to see that, the link is in the description. So I'm going to start with commodities. So starting here with copper. So the last week, copper pushed up and broke a level of resistance, which is right here, but we were not paying attention to this level. We were paying attention to the level of resistance, which is right here in red, as you can see right here. I've said that the price is pushing higher and we have a valid counter trading zone bearish, and that is why I've been looking for the possible trade from a level of resistance above, which is right here. And how nicely the price broke above, right? And we had a nice 382 candle, which is right here. With that, my entry was a little bit below the candle. I did not enter straight away and easily hit 1 ATR target. Now that could have gone easily 1.4 to 1 as well if you would have managed it, but for commodities I normally go 1 to 1 or 1.2 to 1 risk to reward ratio. But here an example of 1 to 1 that hit easily with the rules, with the zone that has been mentioned before the price hit the zone. Now here you can't say that, oh my, you show the trade after it happens. I am showing you the trade before it happens. We are looking at the zones before the price hit the zone, and we did not just enter when the price hit the zone. We entered at the condition that is my 382 candle. If you follow me on YouTube from a couple of years, you know this is the type of entry I personally use for my trading, followed by engulfing candles and pin bars, of course chart patterns as well. So good example of entering with a condition that just happened last week, and then that gave us a good money. Now if you follow me, I try to keep trading as simple as possible. Why is that? From the zones right here, the counter zones, we enter a counter trend trade. If the price is pushing higher, we take sell trade. If the price is pushing lower and hit the level of support, we look at buy trade with conditions. But what if we are in between the zones? In between the zones, all we are looking at a pullback entry. When the price breaks a new high and forms a condition, we go long. So what do we have after the price hit the zone? We fall straight to 50 EMA. And what do we have after that? We have a bullish engulfing candle right here. If I zoom this up, that is a bigger candle than the previous candle and a valid entry condition. Now if you're my course student, you know it is a valid entry that easily hit 1 ATR target right here. And how nicely we grabbed sell profit and then buy profit. We came out. Remember, very important, take your profits in time, otherwise you see these type of moves and you will make nothing. And I'm going to show you a very good example of that next, which is our Forex pair. Now right here, this was the zone sent to the members just last week on Monday. We were paying attention to the zone right here, the area of value, from where we were looking for a possible buy trades on smaller time frame. But what do we have? A very good example to learn and not to lose patience, and a good example of not doing revenge trading. So we entered here. This was a trade, let's send to the members. It was barely about to hit my take profit but quickly fall, hit my stop loss. Now did I get panic, or did I do revenge trading by just entering straight away? No, I did not. But what happens after hitting the stop loss? The price comes back to my area, pull back up, forms what? Forms a nice double bottom entry pattern. A zone was there already sent to the members. We had a valid condition. That is fine if it didn't work out, but again we are still in the zone at the lower level. Price again form a bullish engulfer, a double bottom pattern. And what is stopping us to take this trade? Now I entered here before we had a big news event, that was FOMC meeting. But we entered here before. We did not know that what is going to be the outcome, but we still entered because we had our condition meets, and that news event fueled my take profit. And if you see here, my 1.4 to 1 risk to reward ratio profit target has been hit. Initially was 1 to 1. That could have been hit. Again, if you're a beginner, I will highly recommend you to use 1 to 1 at the beginning stages and then start managing your trade. So you see an example of being patient, not getting panic here, not start doing revenge trading here just by placing every single thing after at the pullback, and then you won't be able to survive just one candle. So a good example here, I'm going to show you the next one, which is silver. Right here for silver, we were looking at the level above, a level of resistance in red and a valid counter trading zone bearish, and with that we were looking at this area for the entry condition on smaller time frame. So do you see here, the price pushes up but did not hit my zone. I did not enter the trade because my rules are very strict and we have to be really disciplined if you want to become successful and profitable. So I still waited and the price pushes lower. We did not hit this zone to take our next buy trade, but instead the price pushes up massively, followed by bearish engulfing pattern, one of my aggressive entry. And you see how nicely the price hit easily 1.4 to 1 risk to reward ratio. But for commodities, like I said, I prefer 1 to 1 or 1.2 to 1 risk to reward ratio because commodities are very risky and fast moving. That is why I don't normally go a bigger risk to reward ratio. A good example of entering your trade at the zone, not anywhere in between, unless we got a pullback entry bullish. We entered at the condition and that gave us a good reward, a reward of being patient and disciplined, not just be in the trade every single day, every single hour. So what do we have next? We have AUD USD, a report sent to the members from last 2 weeks. As you can see, that was sent previous week as well, but we had a report sent to the members. And what do we have right here? The price came inside a level of support that we've been waiting for, and that was sent to the members already. Now if you look here, we had a same condition on Euro USD and we had a same condition on AUD USD. So in these type of condition, I just don't risk 2% per trade. I normally risk 2% per trade, but here I risk 1.5%, and on Euro USD I risk 1.5%. So altogether I risked 3% in 2 trades. And why is that? Because both of the trades were running in the same direction. If Euro USD would have pushed up, AUD USD would have been pushed up as well. So that is why I did not want to risk 2% per trade. Instead, I split my risk and we had both winning trade from the area of value, a double bottom pattern on both pairs, and that pushed the price up nicely, hitting 1.4 to 1 risk to reward ratio. How nicely we took this trade, both trades with condition, and hitting our take profit has given us reward of being patient. And being patient doesn't mean that you just wait for the price to come in your zone and you start buying. Being patient means when the price is inside your zone, wait for the pattern to form, and then we are gonna enter our trades. Now let's look at AUS 200 index. Now indices report sent to the members, and right here I've already mentioned that price is pushing into a continuation, but if you see a pullback to the previous level that was broken, which is right here, that is recently broken, and we had a pullback to this level, in that case that will hit a level of trend continuation zone bullish, and if it happens then we will look for buy trades from this green zone. Now let me show you one thing here. It did not form a condition, a valid bullish engulfer. As you can see, the price opened a little bit above. For a valid bullish engulfer, price must fully engulf the previous candle. In this case, it did not happen, but just to show you an example. So that is why I did not enter this trade, but Just want to show you it did pushed up nicely from my area of value. There are so many other commodities and forex pair that hit my zone and pushed up without a condition, and I don't enter my trade. That is why conditions are really important. It sometimes works, most of the time in my case it do work from my zone. Still very careful to enter my trade when it comes to a valid condition. What do we have right here? Now let me show you something here. AUTCAT, a zone was sent to the members. I've already said that the price has a major zone from where we are looking for the possible buy trade if we get a bullish condition in this area of value. So what do we have right here? So we had a price forms a nice bullish engulfing pattern, but I entered after a couple of hours because I was not at my screens. But when I came back, I saw we had a valid condition. Price is still within my entry frame, so I chose to enter. But as I trade on IC market, mostly forex, I trade on IC market. As you can see, my IC market account is connected, which is right here. AUTCAT, which is right here. So when I see a condition on Oanda, because I've tested all my strategies on Oanda, and I also have an account with Oanda and I trade some of the forex pair commodities and indices on Oanda as well, but mainly here on IC market. When I saw this condition, I entered right here, and as you can see how nicely the price pushed up from here. I chose to go 1-to-1 here because this is not one of my favorite pair to take my trades, but we had a valid condition that pushed up and that could have easily hit 1.4-to-1 risk to reward ratio, and right here that was my entry candle, and right here I exit my trade here where you see this little arrow. So that is how we take our trades with condition. We are already prepared that we have a zone there, and what is stopping you not to take your trade if your strategies are tested? You see how profitable we are last week, and even if we had a losing trade a week before that, we had 2 losing trades in a row. This week we had 2 winning trades in a row. The trade list sent to the members. With that, all these zones has played out nicely. If you have looked at the zone, entered at the area of value, and if you're confused, you can always ask me, Umar, if I'm taking a right entry or not, and I will always respond to you if you are taking a right entry or not, if you are in my priority group, which is a part of your basic coaching. That is why you receive the report, so that you can ask me questions, look at the valid condition, enter your trades if the conditions are valid. Now, a trade alert sent to the members right here. When the market is trending, what do we do? If the market is trending upwards or downwards, we look at the trend, which is what? Which is over EMA, and the price is trading below EMA. What we look at? We look at sell trades only. And why do we have a valid pullback entry bearish? Is because price is trading below 50 EMA, which is my red line, and we have a price pushed lower. We had a price pushing lower lows, and we had a pullback of few candles followed by my bearish engulfing pattern, and that nicely hit my take profit, which is in a downtrend and which is in between the zones. So what happens if the price is trading in between the zones? We only look for pullback entries till the price come in your area of value and you go for a counter trend trade. But in this case, the price did not come to my area of value. Instead, it pushed up, and we'll see a next level above to take our counter trend trade bearish if the price head to my level above, which I'm going to mark over the weekend. So that is how we take a pullback trades between the zones. Then we have NZD USD. Right here, a trade alert was sent to the members, and I've already said that we are a bit late for this entry because sometime I am not in front of the screens and I take my trades on my phone, and when I come back I send trade list to the members, and in that process price sometimes pushes lower, but we were late. In that case, what you can normally do, you can enter at a limit order. If your order is hit, then you can take your trades just to avoid risking your risk to reward ratio. So in that case, the price nicely pushed lower, hitting our take profit. Now, the reason of the priority group is not that you look for the signals. Now, imagine you already know this type of entry, a swing high bearish engulfing entry. If you are my student, you know all the 6 rules for entering this trade. You don't even need to wait for my signal. And if you are my priority members, if you have looked at this entry from last couple of months, if you are in my group from last couple of months, only then you can able to learn. Otherwise, if you are here for 1 or 2 months, you won't understand the entry condition, and when you look at the entries again and again, the conferences again and again, you can able to take your own trading decisions. But right here, a valid example of pullback entry bearish, and our second trade sent to the members hitting take profit. Now I'm going to show you the trade I did not send to the members, and that also hit a take profit. Right here, price is trending above a 50 and 20 EMA. Right here we have a price pulled back followed by swing low bullish engulfer, and that nicely hit my take profit according to my stops and target rules. And that is what I've not sent to the members, but this is something I want you guys to look from the trade alert, learn from it, and take your own decisions so that you don't rely on signal services. That is why we have the priority group. That is why I send you the file where you look and see what I'm looking at, basic instructions if you are in my priority group. But if you are my full course student, you know all the reason behind the entries and the other strategies you are learning, and that is what we have: a valid pullback entry that hit your take profit. Right here, pullback entry bearish for NZD CAD, exactly the same condition we had on NZD USD. If you look here, how nicely the condition works if you follow your rules. And if you look at the rules and if you start managing your trade, how nicely you can able to grab some money out of the market. But the condition is you must be profitable on 1-to-1 first, because only then you can able to gain your confidence to take your trades and manage your trades. But here we have another example, exact same condition that was not sent to the members, but an example that these entries are happening in the market if you look at the condition. And if you start, just follow me blindly, learn from my trade alert so that you can able to learn out of that. Now, there were the zones that did not play out. That is what we also need to pay attention, and that is why we don't need to trade blindly. Now, this for the zone sent to the members that we're going to look for our entry condition from this area of value. And what do you see here? Do you see any conditions here? We had no condition. Instead, price just dramatically pushed up, broke above this level, and saved us to enter a wrong trade. This trade, we had no signal out of the price, no bearish engulfers, no double top, no inverted hammers, no 382 candles bearish. So a lesson to learn: when there is no signal, no condition, even though if the price is still in the zones, we are still not gonna take our trades. Conditions are very important. If you follow your rules, conditions, risk management, good trading psychology, trust me, after a losing streak, it will not even hurt you, because in the long run you will come out as a profitable trader. So remember, follow your rules. And with rules, I've just shown you the trades that just happened last week and how nicely we made money last week. And trust me, these are just simple strategies I'm teaching you here. And this is something I talk about on my YouTube videos. There are other strategies which I personally use, which my MMTA course students are using. And if you use those strategies, then your risk to reward ratio will be much more higher, because then you have other strategies to take your entries as well. So with that being said, let's start our analysis with natural gas, gold, silver, and we're also going to go through cocoa today, because I've been getting lots of messages that it's been trending so high. That is why we're going to do analysis of cocoa as well. So starting with natural gas. Right, so what do we have here on natural gas? As you can see, price is now in a range and just moving sideways. And what does it mean? I want to give you the concept of a consolidation. When the price is inside an area of value, which is right here, as you can see, the price is inside the area of value from quite a while. It did push up, make a new high, and then came back, and now in the process of forming a condition. When the price is inside a demand zone, we have a fight between buyers and sellers, that they decide if the price of this particular commodity instrument should be higher or cheaper. If there comes to a decision that the price of this particular commodity or instrument should be higher, then they come to an agreement and price quickly push up from the demand zone, collect the liquidity, and it just pushes up. If it comes to a decision that the price of this particular instrument should be cheaper, then it just make a new low and the buyers lose the interest. And the condition is the price just make a new low and it start to push lower. So that is the concept of a consolidation. We are now in the consolidation area. All we need to look at this little area of consolidation. Once we see a breakout above, we have a confirmation that price will push up, and that is very likely looking at the fact we are in a major demand zone. So the conditions I'm looking, either a formation of a double bottom pattern, which I've been talking about from last couple of videos, a push up, and if we have a hit of this rejection box, which is 1626, that goes to 1641. It still did not hit here, it's barely above, but if it comes to this level, forms bullish engulfers, or a 382 candle, that will be a double bottom but a weak signal because we are still at the upper level. But I will expect a good reaction and a good bounce, and if that bounce is strong enough, it will break above this level, a consolidation level, which is 1.739, that goes to 1.757. Once it broken above, we have a confirmation that price is now starting to push up, and we have a new trend, and then price will likely hit a level of next resistance, which I'm going to mention once we have broken above this level. But what if the price breaks below this rejection box? If it breaks below this rejection box, that is still fine. Means it will come to a double bottom area, a major double bottom area. What I mean by that, mean a first bottom, which is right here, a push up, a second bottom. It must be rejection without a candle to close below. And in this area, if the price forms bullish engulfers, 382 candles, only then I will enter my buy trade. Stop loss can be below this pattern. Take profit 1-to-1 and manage it till 1.4-to-1 risk to reward ratio. But what if there is no condition here? That is why I want to give you a condition so that you keep an eye. Once we have a condition, only then we're going to take over trades. If we have broken below this low, in that case, we will look for a bearish pullback entry and keep on taking shots till we are below this zone again, and then the price forms a condition in this area of value, which is 1.476, that goes to 1.645. If the price broke below this low, I will still look for my bullish engulfers or double bottom below this area. I've shown you the example of a Forex pair where we had a losing trade above, and then the price formed a double bottom in the lower area of a Euro USD example, and that is what exactly I'm going to look at if we have a condition like this. So that is why I show you, I give you this educational videos so that you can see the condition, how the market moves and how the price forms if the price is at the lower area. And if you see here, we're also getting a divergence in the RSI, but divergence alone doesn't mean that it will push up. With divergence, I want to see a complete hit of double bottom at the upper level, or on a daily time frame, I want to see a double bottom here with the conditions of double bottom I've just mentioned. If we have that, we have a divergence in the RSI, and that will be a very strong signal. Now, like I mentioned on weekly time frame, if this candle closed as a bullish green candle, in that case that will be a signal as well, but the price will push up in a long term, not in the short term. So I personally look at my entries on 4-hour time frame myself, but if you're a long-term trader, you can look at daily and weekly as well. So these are the conditions I will be closely looking at, and I will also closely looking at this consolidation. Once broken above, only then we can decide if the price wants to push up or low for your next buy trade above for the next pullback entry, bullish trades only. Otherwise, broke below this low, I will start to look for my pullback, bearish pullback entries till we get a condition for a buy, which I'm going to keep you informed every single day. That is why I come every single day, because condition forms every single day, and I keep you guys updated with every single moves of commodities. So make sure you subscribe so that you won't miss analysis, daily analysis like this. So keep an eye. These are the conditions now I'll be closely looking at for my entries. Now on capital.com, we have no conditions. That is why I'm just looking at my Oanda platform or this double bottom pattern, which is 1.606, that goes to 1.636. If we have a push down for my double bottom trades. Otherwise, if we are broken below this low, if we have a pullback followed by bearish engulfer, I'll be still going short till we are in this area, which is right here, to take my next entry. But if I see a condition again on Oanda, I will still go long or short, whatever I've just explained. But if we are broken above or below this consolidation, then we will have a confirmation of a trend. So this is an area right here we are now currently ranging inside of. Breakout above will be a signal of the price will push up to the next level of resistance. Breakout below will likely hit the price down to the next level of support, which I've already mentioned. So here on NEMIX, we are inside a zone. Now a very weak signal of a double bottom, but that will exactly the same. Now a consolidation is right here. If we are broken below this low, we will then likely fall to the next level of support, which is right here, 1.467, that goes to 1.597, from where we're going to look for our buy condition or double bottom from this little rejection box right here, if you have a condition I've just explained on Oanda. So wait for the condition to form. If we are broken below this low, I will start to look for my pullback entry bearish till we are in the zone below in green. And remember, again and again, I'm saying conditions are very important. I've shown you the nice successful trades in the first part of the video and how nicely we entered all the commodities indices Forex when the conditions happen. So keep an eye. Once we have these conditions, only then we're going to look for our entries. Next, we have silver. So we have no condition here on silver, but we are in the level of trend continuation zone bullish. For silver, there is a valid 382 candle. It did pushed up from here. If you see nicely 34 points, and if you look at the ATR is 24, that would have hit your more than one ATR take profit, even if you would have entered a little bit above this candle. But I'm still waiting for the price to form a bullish engulfer or a possible double bottom pattern. For that, I will keep my rejection box ready, something like this. Now if the price comes down, forms a bullish engulfer, I will go long, because then it will be a valid double bottom pattern. If the price comes to the lower level, which is 24.26, and forms a bullish engulfers or a double bottom, I will still go long. So this is the zone I want to see a valid bullish engulfers or a double bottom entry. Wait for that. Once we have a condition, price will likely push up. Without conditions, we are not trading. So a buy zone, but wait for the condition. Here on gold, we can likely get a retest of this trend line as well. We do have a buy signal right here, a bullish engulfing candle, and I'm expecting a price to hit at least $12. If you have in this trade, I'll keep my stop loss below, take profit 1-to-1, because I want to keep the protection of this trend line if you have taken this trade. But personally, I've not entered looking at the ratio of gold and silver as well. As you can see with this massive push up, if you have seen my strategy of using ratio, the gold gave us a good pullback. Now we are retesting this level and price will push up from here. If that happens, gold and silver will give us a pullback as well. That is why I've not entered my gold trade looking at the ratio. But if we have a pullback there, we can likely push up and forms a bullish engulfing pattern as well. But that is absolutely a valid condition. If you have entered, make sure you entered with a stop loss and take profit if you want to manage it. This is an area till where you can manage your trades if you have already entered this trade. So for the next pullback entry, I want to see a break above this high. If this played out, and only then I will look for the next pullback entry and keep on taking longs till the price makes new higher highs with conditions. So not looking for sell trades until we are above this trend line of this flag pattern. If broken below dramatically, only then I start to look for my sell trades till the zone here is 2056.50, that goes to 2071.16, from where I will look for my next entry condition with bullish engulfers or double bottom entry pattern if you are broken below this trend line. So keep an eye. Once we're conditioned, only then we're going to take over trades. Here on crude oil, we have no condition. If you are wondering if it is a valid pullback entry, it is not a valid condition. If you are my student, you know all the rules for that, and one rule is not met here. So if I'm now looking at 78.06, that goes to 79.97, from where I want to see a bullish engulfers double bottom for my entry condition. 382 candle bullish is also one of my entry, but a bit risky and aggressive entry. For now, it can still push up, but if it did, I will still not take my trade. But if it pulls back from a condition, only then I will take my next buy trade. Or if you have a dramatic push up above this high, I will start to look for my pullback entry bullish till we are in the zone above in red, which I'm going to mention in my next video. So wait for that. Once we have a condition here, only then we're going to take over trade, and this is not one of my valid conditions. Last one, we have cocoa. So what do we have? As you can see, it's been pushing up massively in an uptrend. What is the concept of the uptrend? I want to explain you a little concept. When the price is trending higher, it gives us a breather, and once we have a pullback of this breather, and with this pullback, without a price breaking below the previous low, if we have a pullback with a condition, that is a signal that price wants to push up and continue to push up in a trend. So the condition is giving us a signal that I'm going to push up. And what do we have? A bullish candle, even though it's not a bullish engulfer, because on this particular commodities we have lots of imbalance. That is why that is a bullish candle, and it pushes up. Now for my next entry, I want to see a break above this high, right? We had a break above this high, above the zone, and we have a close of this candle, the price pushes up. Now what do we have? We have another breather. With this breather, the price did not break below this low, right? What does it mean? It means the price still wants to push up with the trend. And what is the signal? A swing low bullish engulfing pattern, right? We have a signal of a swing low candle. We entered here, that pushes up, right? Now I want to see a break above this high. We had a close of this candle, we had broken above this high. Now we want to see a pullback followed by a bullish candle. Now we had a pullback here, not a big pullback which I want to see, but we had a bullish candle and we have broken above this high. So what do we have now? All we want to see another breather, exactly the same concept I've shown you here or here. Now if you see a pullback, a good pullback above 50 EMA and at this little anchor level which is 7316, that goes up to 7598. If you have a pullback followed by bullish engulfer, we will have another signal that price wants to bounce up and likely break above this high before we look for another condition with a bullish engulfer and keep on taking longs till we get a breather followed by a bullish condition. Now if the price pushes up, forms a bullish engulfer at this anchor level, that is also a signal that price will form a bullish engulfer. It forms a bullish engulfer without a price breaks below this low. It is giving us a signal that I'm going to push up. If the price forms no signal and breaks below this low, means the price now wants to push reverse in a new trend. So that is what I'm looking at, a possible signal at my anchor levels. If we have that, we are good to go long. Only looking for pullback entry bullish and buy trades because we are pushing up nicely in a trend, and trend is your friend until it bends. And when does it bend? I've already given you the conditions. So hope you got a value out of today's long video. If yes, hit a like button for me, subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green and have an awesome weekend. See you guys in the next video. Till then, take care.